eBay is outperforming 80% of all stocks right now. My scanner scored it 84 out of 100 this week. Signal is watch. But the market regime is pulling the final call down. I will show you exactly what has to change before this becomes a trade. The scanner runs every stock through 4 criteria. Let me show you where eBay lands on each one. Composite score, 84 out of 100. First, leadership. This measures how eBay is performing relative to every other stock in the market right now. Score, 83 out of 100. That is strong territory. Solid relative performance. The stock is holding up better than most. Second, setup quality. This scores the technical pattern. Is the stock forming a proper base? Is the entry tight? Is there a clean risk level to define a stop? Score, 90 out of 100, elite. The pattern structure is clean. Third, fundamentals. Earnings growth, revenue growth, profit margin. Score, 80 out of 100, strong. Strong numbers across the board. Fourth, relative strength rating. This tells me how this stock has performed over the last 3 months compared to every other stock. Score, 80, meaning eBay is outperforming 80% of the market. Above average momentum. Add all 4 scores up and the raw signal is buy. But there is one more layer, the market environment filter. I will explain exactly how that changed the final signal when we get to the verdict. First, let me show you the actual price chart. Now, the price chart, built from live market data. eBay is trading at $115. The 52-week range is $75 to $119. It is 4% below its 52-week high. Enough room to run. Not so far, it is broken. Price is above all 3 key moving averages, the 21-day, 50-day, and 200-day. That is a healthy uptrend. RSI is 50.99. Healthy momentum zone, not stretched. Now, let me give you the exact trade numbers, entry, stop, target, and the risk-reward ratio. Here is the swing trade plan for eBay. Entry near $115. Stop loss at $109. That is 5.2% below entry. Target at $121. 5.2% above where we enter. That gives us a risk-reward ratio of 1 to 1. Based on recent volatility, this trade could take anywhere from 6 to 24 trading days to play out. The key discipline here: know your exit level before you enter. A trade without a stop is not a trade. It is a hope. Important note, earnings are in 15 days. Either size this smaller than usual or plan to be out before the report. Earnings is a binary event or odd. The best chart in the world can a gap down 10% overnight on a miss. Now, let me answer a completely different question, one that matters even more for a lot of people watching this. Is this a company worth holding for years, not just weeks? Because that is a very different decision, and it deserves its own answer. Now, the question a lot of people ask, is eBay worth holding long-term, not just as a swing trade, but as a multi-year investment? Let me walk through the fundamentals. Earnings are up 7% year over year. Moderate growth, solid, but not explosive. Revenue is growing 20%. The top line is moving in the right direction. Profit margin is 17.6%. Decent. Not elite, but sustainable. The forward PE is 17-ish, fair valuation. The market is not pricing in miracles. Wall Street consensus from 27 analysts is a hold, and their average target of $108 is actually 6% below where the stock trades today. Remember, analyst ratings lag the price and are almost always bullish, but the direction matters. Debt to equity is 163. The company carries significant leverage. Fine for a large stable business, but worth monitoring. The fundamentals tell you whether the business deserves your capital over years. The scanner and the chart tell you whether right now is the right moment to act. You need both. So, let me give you the verdicts. Swing trade first, then long term. Swing trade verdict, watch. But here's what I want you to understand about this one. The stock itself scores 84.3 out of 100. My scanner's raw signal is buy, meaning the stock, the setup, and the fundamentals are all aligned. But my system also looks at the overall market environment before it lets me act on a signal. Right now, the market is in risk-off mode. When institutions are pulling back from risk, even the strongest individual setups carry more downside than usual. So the system takes the raw buy and caps it at watch until the market confirms. Think of it this way: the stock is ready, so the market is not. What I am waiting for is a shift in the market regime back to risk on. When that happens, eBay would likely flip straight to buy. That is the trigger. Watch the market, not just the stock. And the long-term verdict on eBay: a void. Fundamentals don't support a long-term position at this price. The fundamentals don't support a multi-year position at today's price. There are better places to put long-term capital. As always, these are facts and analysis, not advice. Your financial situation is unique. Do your own research before you invest. Before we close out, I want to walk you through one more way to use this analysis: an income strategy. If you like eBay but want a better entry price, consider selling a cash secured put. Here's how it works: sell the 32-day put at the $14 strike, collect 2.71 per share in premium. That is $270 per contract. That is roughly 2.6% return in about 32 days. Now, there are two outcomes. If eBay stays above 104, you keep the full premium. Done. You can do it again next month. If the stock drops below the strike, you get assigned, meaning you buy eBay at an effective cost of $100, which is about 8.5% below today's price. That is not a disaster. That is buying a scanner-rated watch stock at a discount. The key is only sell cash-secured puts on stocks you actually want to own. eBay scores 84 out of 100 on my scanner. That is the kind of business where assignment is not the bad outcome. Just make sure you understand how assignment works before you try this. And only use capital you are comfortable tying up for the duration of the trade. That is the full breakdown on eBay for Q3 2026. Swing trade plan, scanner score, and the long-term investment picture, all powered by live market data. If this analysis saved you time, hit like and subscribe. I publish a new deep dive every week. Drop a ticker in the comments and I will add it to the queue. See you in the next one.